Good morning, Paul Georgi from Allendale. It's July 7th, Thursday morning. We do not have the export sales numbers this morning. They'll be pushed off to tomorrow morning because of the holiday on Monday. But markets, corn, soybeans higher, wheat lower. At least that's the overnight action. Would expect that we're going to open in that price range here this morning. Corn traders are waiting for some news to push this market higher, to take it through that 620 area in the December contract. That seems the focus of the trade. Yesterday we tried it most of the day, kept working higher, and then toward the end of the day seen some position evening, market end up selling off. Looks like we're going to be taking that same approach here today. We did get some news out here this morning, however, that China and Argentina have come to an agreement allowing Chinese corn and Argentina corn and Argentina beef to be brought into China. That is something they've been talking about for several months. Appears like they've come to an agreement on that, which could be several million tons of corn. Initial reaction by comments from our floor traders is that the floor is trying to spin this as a bullish situation, stating that, well, China needs corn. Now it's proof that they need corn and they're going to buy corn. Well, that is very true. The problem is that they may buy it from a different country rather than the U.S. We're still waiting for announcements coming from U.S. government here on their export sales. 8 o'clock this morning, we'll get that number again. We've been waiting for several days now. Nothing has showed up going to China. So that is some underlying support for the corn market here this morning. However, when it's all said and done, it may turn out to be a bearish situation simply because the corn is going to be bought from Argentina rather than from the U.S. Soybeans, they are stronger as well. A couple factors there. Demand, I think, is the most dominating factor right now, expecting China to buy more beans and looking at new crop beans as they go into their purchasing time. However, we do have USDA supply-demand report next week, Tuesday morning at 7:30. Trade's already trying to anticipate what kind of adjustments USDA might make since our planted acreage and quarterly stocks numbers of last week. So it looks, however, that new crop soybeans are going to show some tighter ending stocks numbers simply because of acreage that was planted to soybeans, and demand could be increasing and improving for the new crop soybeans, which is providing some support there. We've got the July contracts that are going off the board on July 14th. That the open interest there is getting smaller on a daily basis. Anybody left in those contracts maybe should be moving out of the July because it's going to be extremely volatile and choppy as we go into this the 14th and the last trading day time period. In wheat, however, we're looking at lower prices this morning. We are getting demand there. USDA announced sales, and we've got tenders coming in to the U.S. for wheat. However, Egypt has bought some wheat from Russia finally. They finally made a deal there. And I think that has U.S. wheat traders concerned as Russia and the Ukraine have plenty of wheat to export now. It's just that countries have backed away from it because of them halting exports a year ago. And we're also getting reports out of Russia and Ukraine that the wheat crop there is good. Yields are better than they thought and much better than last year. So that is kind of weighing on our wheat prices here. However, when we get through doing the price analysis here, we are at the lower end of a suggested trading range, so we would not be pushing this market from the short side much further than where we're at this time. Other news, we did have ADP come out this morning with jobs. Showed an increase in jobs of 157,000 versus trade was expecting anywhere from 60 to 90,000. We also had the European Central Bank raise interest rates 0.25%, which should provide some support for the euro, maybe a little bit of weakness here in the U.S. dollar. In the livestock trade, we've got cutout values up in beef, choice up 20, select up 36 yesterday. Pork cutout was up sharply, up 119. We have not seen any trade yet in the country. Packers are very tough this week, and they thought they would not have to pay up last week. They did. We expect some steady prices here at best this week in the cattle. Now, hogs, the hot weather is continuing to support cash hog prices. The price difference in the index between the July contract and the actual cash index is quite a few dollars apart. Watch that as we go into expiration. Should be supported to the futures, as cash markets seem to be holding in here very well. Markets are going to be very choppy here over the next several days as we get into the USDA report next week. We would advise you to stay in touch with Allendale Research. We'd be happy to help you in any strategies or any thoughts that you might have. Just give us a call at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.